Good morning, traders. Welcome to your daily digest for the 9th of November 2015. As always on a Monday, let's start off the week with a wrap on what happened last week and using that to give us our starting point for the week when it comes to currency pair and direction. So undoubtedly the key event from last week was the US non-farm payroll report. It was highly anticipated because we have been waiting for a rate lift-off from the US central bank for some time, and at the last FOMC meeting they suggested that it could happen in December and that they'll be looking at things such as inflation but also employment as an indication as to the timing of the said rate lift-off. At the time, the market did price in around a 50% chance of a rate lift-off. So, understandably, the non-farm payroll was watched by many and highly anticipated as a sign of what could be to come. Figures were expected at 185k, relatively bearish figures, being below that 200k threshold, but figures stormed through expectations and came in at 271k. So we saw a massive surge in the dollar, and the markets are now pricing in around a 70% chance of a December rate liftoff. So moving into this week, the US dollar is definitely the strong currency to be watching out for at the moment. Now, another highlight, we did see some relatively downbeat quarterly inflation reporting from the Bank of England that has weighed down on the UK pound and given some temporary weakness. In the longer term, things are relatively bullish from the central bank. We know that the next action will be a rate hike. However, timing of that could now be put back to 2017. So we can expect some weakness on the pound moving forward. But the key event was definitely that US non-farm payroll report. Now, we have a look at the FX opening news for today. We can see already that the US dollar index has stayed relatively firm and traded near those April highs after Friday's US non-farm payroll report. So things are looking pretty good over in the US side of things. Now, what we'll be looking out for this week will, of course, be further data from the UK. So in particular, employment and any inflation figures. We need to be listening out to that to see if it comes out bearish in line with what the Bank of England's tone was, or whether things are more upbeat than we think. So with that in mind, we're going to hold fire on trading the pound at the moment, but the US dollar is very much a safe one to think about trading. So the question is, what do we trade it against? Well, again, going back to last week, highlights have been weakness on the euro, following the expectation of further easing from the ECB, and also weakness on the New Zealand dollar, where we took a big tumble following those poor GDT milk auctions. And again, we're expecting to see further easing from the Reserve Bank of New Zealand. So the euro and the New Zealand dollar are the weak ones to trade the dollar against moving into the week. So, with that in mind, having a look at what's due out news-wise, there's nothing coming out today that we're going to look to trade, which is fairly usual. If you are looking for a little scalp, tomorrow in the early hours of the morning, we've got the Chinese CPI. We're expecting a slight dip at 1.5%. If the figure comes out less than 1.5%, so a bigger dip than expected, you could look to start scalping the Aussie US dollar to the downside. So that'd be the only interesting news-based trade in the next 24 hours. Now, in terms of any kind of longer-term trades or day trades, we could certainly look at retracements on the euro dollar and New Zealand dollar. So in terms of any potentially hot levels, the 38% retracement is a relatively good one because we're fairly close to a daily pivot. However, if you look at the 50% retracement here, you can see we've got a near perfect confluence with another daily pivot. So with that in mind, a really good little sell level would be around 1.0794. That'd be a really decent little sell level on the euro US pair. So I'm just going to mark that down so you guys can see relatively clearly the levels being discussed. And also, if we have a look at the New Zealand dollar, US dollar, again we had some strong rallying down from that pair as expected. And in terms of any key complements, at the moment the best one I would say is around a 38% retracement. So we're there now, we've just popped above that level. So you could start looking at potential sell stops at 0.6547 if you're looking to trade any retracements. So definitely tradable opportunities there, and potential pip gains from those. You know, anything around the 50 pip mark would be pretty good. Of course, for you scalpers out there, scalping pairs, definitely look for short on the euro dollar and New Zealand dollar. So in terms of intraday, we've got the levels, we know what we're doing if we're looking at any scalping. So that's pretty much it for the daily analysis today. As always, if anything kind of changes that's significant, I'll let you guys know. But other than that, that would be your overview for the day. So use it to your advantage. As always, it's keeping that mindset that technical trades and technical plotting, etc., that's just consistent management technique. The actual decision we make when it comes to trading is always based on the fundamental picture, because we know that logically, because of the economy of the currencies we've discussed, the Euro US is going to be falling in the shorter and longer term, as is the New Zealand US. That's it from me all. Have a great day.